Welcome to the Trading Desk, where we say money talks and conventional wisdom walks. My name is Dave Floyd with Aspen Trading Group here in Bend, and with me as always, Matt Davio of Red Rock Partners and Jesse Felder of Felder & Company. Before we get into today's show, let's take a look at what the markets did in the month of February.
Welcome to the Ides of March. Markets continue to fall. First up is the daily chart in the S&P, which is going back 2 years. We've fallen now about 55% from the highs of the November-December 07 timeframe. We're now sitting today, we closed at 680 on the S&P. We are projecting 600 to 650. If you look at the next chart, which is the monthly version of the same S&P 500, you can see the lost decade continues. We've lost about 5%. If you bought in 1997, that's right, buy and hold, folks. Buy and fold is more like it. You can see some support on the left side of the chart around 600, 550, 600. I'm saying we will go there over some time. The 10-year rate, if we are to see a reflationary trade, that is a jump in stocks, you will see the 10-year bond yields are very low right now, very extreme. Risk to the high side right now. I think you're going to see a move to the upside over time there. There's more risk to the downside than to the upside. Oil, again, we've talked about oil before. It's gone from $150 per barrel down to as low as $32, currently trading around $39. Oil is looking oversold, but I still think we will see $25 oil here in the next year as the demand continues to decline. And finally, you can have no rally without the banks. Banks continue to fall. We're at an all-time low on the XLF, which is the ETF for the banks. Look for a run maybe to 20, but you'll run into resistance again at the $20 level.
Nothing much has changed in the markets. We could just continue to sell off another 10% on the S&Ps in the month of February.
It's brutal. I thought you were going to say, let's take a look at the brutality in February before we went to the charts. It's
death by 1,000 cuts.
Brutality.
And again, we've been talking about it we've been on the air over a year and a half. We've been doing this show. You know, this buy and hold, you're down another 10% in 1 month. Yeah. It is just insane. And I think we have further to go, personally. I think we're going down towards 650, maybe even 600 on
this. There's no support right now. Matter of fact, we closed, we were talking about this as we walked in. We were trading 681 as we walked into the studio, and that was, the future. So that's real trading live as we speak. They trade pretty much 24/7. So the market it's ugly. And once we broke that 800, it went to 740. We broke 740. That was the next level. Now, really, there's really no support. 600, 650, somewhere in there. You flip a coin. There's some mild support somewhere in there.
I think we're going there, though.
But it's ugly. And the Dow's at 6,600 right now.
Yeah.
I know what you're going to say, but go ahead.
I think it all depends on your time frame. If you're a trader, the trend is still down, and there's, like you've been saying forever, there's no reason to buy. If you're a long-term investor, however, this is exactly what you look for: is this kind of pessimism, these kind of opportunities, and it doesn't. It's scary, but this is when it's time to step up and take advantage.
And if you've never been in, and if you haven't been in the market and you've been sitting in cash, I agree with you. Buy 20% here, and you got 80% of your wad left. If you're in that money on the sidelines piece, I think it's a great time. And again, you're not a buy and hold guy. You're an active value investor. So it's not like the one thing I will say about Jesse, he hasn't been riding it down.
I've been buying all the way down. I'll make that very clear. I've been buying. It's been painful. It's very painful. But, I think that's the right thing to do. And I would even say if you're 50%, 60% in, put another 20% in here and keep scaling in as we go lower.
My question always comes to, I agree with you, but why not wait until you have that turn? Why not miss that first 5 to 10%? Because you, as you said, you've been scaling down. And I'd like to talk about that when we come back. Yeah. And let's talk about trading versus investing, and just have a little philosophical discussion about that.
Perfect.
I think it's a good one. We're going to pay some bills, but when we come back, we're going to continue this discussion. I've got something to add on it as well. You're watching The Trading Desk on COTV, Channel 11.